Given that net profit margin is 4%, so net income equal to 4 divide sales, which is 100. So we will get the answer is 0.05% of sale increase. We need to minus new sales with old sales and then divide old sales and time with 100. So 2,500,000 minus 2 million divide 2 million times 100, and the answer is 25%. Third is dividend payout ratio. Dividend payout ratio is 17%. So 7 divided by 100 and we will get 0.7. Next, new retained earnings. To get new retained earnings, or retained earnings plus 1 minus dividend payout ratio, multiply net profit margin and multiply with new sale. So 82,000 plus multiply 1 minus 0.7 multiply 0.04 multiply 2,500,000. So the answer will be 112,000. To find change, we need to divide new sales with old sales and divide with old sales plus 1. So 2,500,000 divide 2 million divide 2 million plus 1, and the answer will be 1.25. Total amount of additional fund needed. Total fund for investment, which is total amount of asset, we need to minus with internal financing, which is total amount of liabilities and equities. So RM 375,000 minus with RM 344,000, and the answer will be RM 31,000.
Firstly, starting from cash until net fixed asset, we multiply with the change of sales, which is 1.25. For cash, we have 128,750 ringgit. Next, for marketable securities, we got 50,000 ringgit. Then accounts receivable, 18,750 ringgit and inventories. And net fixed assets are 65,000 ringgit and 112 and 500 ringgit respectively. The total sum of the amount is 375,000 ringgit. For account payable and accrued expenses, we need to multiply it with the change of sales, which is 1.25. For account payable, we have 40,000 ringgit, whilst for the accrued expenses, we got 30,000 ringgit. Meanwhile, for the notes payable, long-term debt, and common share did not change. The amounts stayed the same, which stated in the question, 45,000 ringgit, 63,000 ringgit, and 54,000 ringgit respectively. For the new retained earnings, we got the amounts of 112,000 ringgit. And lastly, the amount for the additional fund needed is 31,000 ringgit. The total sum of the amount is 375,000 ringgit, and that would make it balance on both sides. That is it from me. Thank you.
Hi, I'm Nur Idina Nabila binti Haidi. This is statement for Zara and Fatima Company cash budget for third quarter of 2018. Sales. July is 460,000, August 440,000, September is 480,000. Step 2 is identify cash sales and credit sale. Cash sale is 20%. July is 92,000, August 88,000, September 96,000. Credit sale for 1 month after is 40%. So 188,000 from June will paid on July, 184,000 from July will paid on August, 176,000 from August will paid on September. And 2 months after sales is 40%, 180,000 from May will be paid on July, 188,000 from June will be paid on August, 184,000 from July will be paid on September. Cash inflow for July is 15,000 and September is 27,000. And for total receipt is for July is 475,000. August 460,000 and September is 483,000. That's all for me. Thank you.
Next step is calculating purchases. First, just copy down the number of purchases per month as given in the questions. Next, identify cash and credit purchase. For these questions, 10% of purchases are cash purchases. Thus, cash purchases for June will be 14,000 ringgit, 10,000 ringgit for July, 8,000 ringgit for August, and 11,000 ringgit for September. For credit purchases, 50% will be paid 1 month after the purchases is made. Therefore, 50% of purchases in June, which is 70,000 ringgit, will be paid in July, 50,000 ringgit for July will be paid in August, and 40,000 ringgit for August will be paid in September. The other 40% will be paid 2 months after the purchase. So, purchases made in May will be paid in July with the amount of 60,000 ringgit, 56,000 ringgit for June will be paid in August, and 40,000 ringgit for purchases made in July will be paid in September. Next, we have to identify any expenses that occur in the company. This includes rental, salaries that will be paid 20,000 ringgit and 50,000 ringgit per month respectively. Dividends of 20,000 ringgit will be paid in September. Taxes of 80,000 ringgit will be paid in August, and fixed asset purchases of 25,000 ringgit will also be paid in August. Meanwhile, principal and interest payment of 30,000 ringgit and 10,000 ringgit will be paid in July respectively. Lastly, total up the purchases and then we will get 250,000 ringgit in July, 289,000 ringgit in August, and 181,000 ringgit in September.
After we calculate all the purchases, we will have to find the net cash flow by subtracting total receipt and total purchases for each month. For example, RM 475,000 minus 250,000 equals to RM 225,000 for July, RM 171,000 for August, and RM 302,000 for September. The company has a beginning balance of RM 62,000 in July. This value added with RM 225,000 to get the ending balance for July. The ending balance for July was RM 287,000 will be the beginning balance for August. Meanwhile, ending balance for August was RM 458,000 will be the beginning balance for September, and the minimum cash balance required is RM 20,000. Therefore, all value each month will be subtracted with RM 20,000, and ultimately we will achieve surplus of RM 267,000 for July, RM 438,000 for August, and RM 740,000 for September.